When is a good time to start investing as an immigrant? This is a question that we get all the time. And it's something that's always in the back of people's minds, right? Because it's a big, scary thing for a lot of people to become the first in their family to be investing in the stock market. And there's a short answer to this question and a longer answer. I'll start with the short. The short is the right time is now because the number one way to build wealth in the United States in the stock market is time. That's the number one way. There is no get rich fast scheme. People try, there are types of investing that is definitely much more high risk that some people pursue. That's not the kind we teach in immigrant finance school. We focus on more long-term wealth building that leads to results. And to get those results, you need time for the money to grow. That's the way it works. And so to have the time for it to grow, you have to get started. And delaying it is only at the expense of yourself and the money you could be making in that time that you don't have if you wait to start investing. So let's dig in. I'm going to show you my favorite investment calculator that really it helps give you the numbers to see the importance of time in the market. So you know what I'm talking about. So let me go ahead and share my screen. And here we go. If you just go to Google, and this is a blog, by the way, we have on this topic. If you want to read more details, I will drop the link for that in the description below. So if you just go to Google and you type in investment calculator, it's the first one that comes up right here. And this is going to help you see the power of time in the market and getting started as soon as possible. So we can start with zero, starting amount as a new investor. Let's look at what happens after 10 years of investing. For the return rate, I like to show people 8% because we know over the past 100 years, if you look at the US stock market over 100 years, it has grown increasingly on average at a rate of between 7 to 12% over the years. If you average it out every year. So eight's kind of a conservative estimate of that. And then it's going to be compounding, which means growing continuously. And we can look at just, starting with like $200 a month, what that would look like and calculate that. What that would mean is after 10 years of investing, $200 a month every month, right? That time in the market, you would end up with over $36,000. 24,000 will be the contributions, the 200 you put in every month, essentially. Over 12,000 is the free money and interest and passive income that you get when you're investing in the stock market and ride the growth of the stock market. So that's over $12,000 you wouldn't have otherwise if you weren't investing. If this money had been sitting in a bank account, it would have been very, very little that you would receive. And let's also look at the power of time. So I'm going to add just three years here. So go from 10 years to 13 years to show you the difference of time. Everything else stays the same, still $200 a month at 8%. We can see after 3 years, we went up to 54,000 just by adding 3 years. And the interest went up to almost 24,000. So the interest went from about 12,000 to almost 24,000. So it doubled in just 3 years. Why? Well, it's because of the power of time in the market. The more time you are in the market, the more your investments start to grow faster and faster. They grow exponentially because you're putting in that, in this case, $200 every month. That $200 is earning interest continuously, and then that interest is earning interest, and so on. You're also getting dividends along the way. So as more time goes on, that's why we see an upward curve of your investments growing faster and faster exponentially over time. We can see it here in this chart, the blue part. So the green is the money that's growing, right? The blue is what you're putting in over time, right? That 200 a month over time growing is the blue part over time that grows. And then you can see the green part of the free money, the interest starts to get bigger and bigger over time as well. And then if we look at what happens just further with time, let's say you're doing long-term investing for retirement, for a secure future, for just being able to have money that you earn that's not from trading time for money at work, just like income, right? Or passing money to children, children's college education, whatever it is. So let's look at like 20 years, and still $200 a month. This is where we get into six figures. So that's now over 118,000. Um, Only 48,000 is that 200 a month you're putting in over those 20 years. Over 70,000 is the free money and interest from that time in the market. And then the thing is with investing in time in the market is like you see the growth happening. It gets very motivating, and your brain starts to ask like, how can I, this is working. How can I do more of this essentially? And so you start thinking like a wealth builder, and you might say, oh, okay, can I take on a side hustle or negotiate my salary or start a business? Some way to increase more. So let's say you were able to bring it up to 500 a month. So everything else stays the same again. We're looking at 20 years, 8% growth. Now 500 a month you're putting in. So this is where, we see now over $250,000 result from that, over 295,000, with over $175,000 in free money and interest earned. So this is the power of the market. Last thing I'm going to show you is just like at 30 years, like let's say really for retirement. This is where we now, the numbers are really picking up. We're now seeing over $500,000 in free money from that. So the answer is to get started now so that you can ride that calculator wave. And I just want to point out a few things from the article. So a lot of things people have heard, when they're the first in their family to be investing is like, wait until you have more money. Not true. You can start with $1 at a time if that's all you can do, or $20, $50, $100, whatever you can do. As long as it's like, consistently every month you're doing that to get that time in the market, you can really start to build a good habit and start to see some growth that you can add to over time once you're able to. You don't need to wait until things feel more stable or you fully understand investing. The point is to just get started, so that you don't lose that time, right? There's a concept in economics called opportunity cost, which is about how like the cost of not doing something becomes worse, right? Than doing it, right? So like it's actually, you're losing money by waiting, because you're missing out on that calculator growth, right? And your money could have been growing all of that time. So a lot of immigrants we talk to feel really stuck, making this jump. There's often deeper reasons going on underneath. For example, like, you might be the first in your family navigating this. You might not have anyone ahead of you to follow and be a mentor or guide in this, right? It's very brave to be the first one in your family to do this because you are changing, generational legacies going forward. Like your family will no longer be a family that doesn't have investors, right? Owning the US stock market. And it might be that like you've just had a lot of financial traumas in the past. You might fear that one wrong move could be catastrophic after everything you've already sacrificed. So this is why it's important to get some support, some guidance to tap into that financial education so that you're able to feel confident in investing. That's exactly what we help with in Immigrant Finance School. We don't manage your investments for you. We teach you how to do it yourself so that the rest of your life you're able to be a confident investor. And I promise it's not as complicated as it seems. They make it sound really complicated so that certain people don't do it. But, once kind of like learning a new language, once you get over like the initial hurdle, you start to get more familiar, and it is possible. That's why we've been able to help hundreds of immigrants and their families start investing. There may also be fear of losing your hard-earned money. That's super reasonable. So I always say to our clients in that situation, just start small as you learn and educate yourself. You can start with $1 a month, right? You don't have to put a lot in, but get the logistics ready, get the account open, learn how to navigate the interface with the investment account, start to learn the concepts, right? And then you can make a decision later. If it's not for you, that's fine. You won't really have lost anything, but you will give yourself the opportunity to get started, and once you feel comfortable and confident, be able to take advantage of those calculator returns that we saw. So the right time is now, really. You can start small. We're here to support you. The best way to get support is just go to immigrantfinanceschool.com. You can learn more about our program, and we invite you to just kind of try to flip the question, because part of wealth building is thinking differently, right? And so kind of that opportunity cost idea I talked about. So try instead asking yourself, like, what's the smallest, safest move I can make right now to put myself in a position where this is an option for me? Is it opening your first investment account? Is it spending an afternoon learning about index funds and how they work? Is it setting up, a modest contribution each month, $25 or whatever you can? The key is consistency and time. Consistency of investing over time rather than waiting for the right time. There will never be the right time. That's a made up thing, right? It's about taking action, getting support, building momentum rather than waiting for things to feel perfect. So, hope this is helpful. Let me know in the comments if you learned something from this today. And I look forward to seeing you in the next video. Take care.